My guest is still Tanner Mobley-Hill, and we continue to talk about VA loans. If you missed the first part, make sure you go back and take a look at it. There's some good, important information that you may want to see. So take a look at it if you have not done so. All right, Tanner, you ready?
Let's do it, Patrick.
Okay. So let's talk about proven eligibility. In the first segment I talked about, I had a VA loan, and it was like 14 years ago, back in 2004 by the time I changed over to conventional loan. If a person had a long period of time, they did not have contact with the Veterans Administration, and they were seeking this loan, and the information may have changed somewhat, what are some documents they may be able to use to prove that they are eligible for that loan?
Sure. Well, let me talk about the process first. So what I do is when I pre-qualify a client, I will then go on the VA's website and pull up the certificate of eligibility. It's there roughly about 80% of the time for veterans. Now, in veterans who are older, then often we have to go ahead and execute a certificate of eligibility request form, and then also get a copy of their DD-214. I get that information from the client, I send it into the VA, and generally about 7 to 10 days later, they will have your certificate of eligibility in the system. Now let's say you're a Korean War or somewhere around that point, and I have helped those clients before. So maybe you don't have a DD-214 anymore. So then the additional step would be to contact whoever is in charge of the DD-214 for the government, get the DD-214, get the certificate of eligibility request form, and then we send that into the VA.
Okay, fantastic, fantastic. Now there are certain circumstances at times that a person who is not a veteran can get a VA loan, and that's through a VA loan assumption. Is that correct?
That's correct.
Okay. Tell us about that process and what goes on with that.
Well, the VA loan assumption is something we're going to start seeing in our marketplace a lot more coming up, because everybody, at least in our area, has super low rates in the 3s to 3.5 range. So people that are looking at rates at like the 4.5 and 5, as these rates keep creeping up, they're going to really look to the VA loan assumption to be a way to get a lower payment. So a non-veteran can assume a veteran's loan under certain circumstances. Generally, they have to be able to qualify as the biggest thing, because the veteran would request what's called an assumption package from the lender, their current lender. That lender will send it to them. They complete it with the person buying their house. It goes back into the lender, and then they make the determination whether or not that person can take over the loan. It used to be they could just do it automatically, but they got wise to that now, so you have to check the boxes before they're just going to let you take over the VA loan.
Okay. So I assume there's an associated fee with that, a person assuming that loan?
That's correct. So the funding fee for somebody just taking over a veteran's loan is 0.5% that is tacked on to the current loan balance. The one thing I would caution, though, for veterans out there is you want to make sure that another veteran takes over your eligibility. So using you and I as an example, let's say I'm buying your house. You have a portion of your eligibility tied up in the property, and I as a veteran could take over your complete entitlement, and you can move on to the next house without having that portion of your entitlement cut. Now, if I'm a civilian and I take over your house through the assumption route, that portion of your entitlement is gone until I sell the house or refinance or something along those lines. So in our area, that could really cut into your buying power down the road.
Something to look out for sure.
That is correct, yes.
Okay. So I think one of the more popular loans, I'm not too familiar with this, is the cash out loan. Tell us about the cash out loan on that, please.
Well, the cash out refinance used to be limited to 90% loan to value of a person's property, but now it's gone up to 100%. So the great thing about that is you can use it to pay off credit card debt. You can use it to, I had a client put in a pool with it.
Wow.
You know, just a lot of ways where if you needed the cash, you could use that route to get the money.
Good. That's fantastic.
And one other thing I wanted to say about that as well. So where I really started to run into that were clients who had purchased in 2006 through 2009 timeframe in our area.
Oh, yeah.
They got in a conventional loan, so they were upside down.
Yeah.
As the property values started rising and catching up to their loan amount, when they got to that 100% point, we were able to refinance them if they were veterans using this cash out program.
Well, that's good.
So
that's good.
They didn't get any cash out, but at least they were able to get rid of a 6.5%, 7% rate that they were in before.
Right. And that brings us to the next one here. Well, I don't know if this is similar or not. I'm going to just read it off the paper because it's such a long title here.
Sure.
The VA Interest Rate Refinance Reduction Loan. Let's talk about that for a second.
Sure. So that is pronounced Earl. EARL, even though it's IRRRL.
Okay.
So the interest rate refinance reduction loan is basically used when you have, let's say, a 4.5% interest rate, and rates have fallen, and you want to be able to take advantage of that. So the VA has this program where you can just lower the rate without an appraisal, without. Yeah,
huge.
A big deal, because you never know when an appraiser is going to bring one in low on you.
Right.
So without an appraisal, and often without a lot of income documentation. So you're not providing pay stubs, you're not providing W-2s. They just want to make sure that you're still alive, and that's basically it. So it's a great program.
That is a great program. That's fantastic there. So the final thing I want to talk about is the renovation loan. Up to $29,000 they could use on.
Correct.
Okay.
The VA Renovation Loan is a new product. I think we'll start seeing it more in our marketplace. It's pretty popular in different parts of the country where there's a more of a need than we have right now. But as our houses around here start getting older, that will be an option for clients where you can replace the kitchen, you can finish off a basement, you can redo bathrooms, just stuff like that. Can't be structural, so you're not moving retaining walls or anything like that. But if it's just cosmetic stuff, it's a program to look at.
Now, do you often have people who might have purchased a HUD home and try to use that on that or something of nature to fix it up?
That'd be the ideal route, correct. There's certain areas around here that we can think of that would be perfect for renovation loans. So if you still had that house from 1997, 98, and you hadn't done any upgrades, that'd be a good one for the renovation loan.
Okay. Fantastic. So, very good. Anything else you want to add for the VA loan at this time?
I think one of the bigger things that I think people should be aware of when getting a VA loan is there are still closing costs associated with a VA loan. Because a lot of times I'm helping a veteran and they go, well, I'm getting 100% financing, so they don't keep in mind that you also have closing costs associated with the loan. They think that's not part of it because they're getting the 100% financing. So I would say to both agents and also clients, keep that in mind when you're writing the contract. You need to either get the money from the sellers to pay for it or factor that in as part of how much money you're going to have to bring to closing.
Very important, very important. Well, Tanner, thank you very much for the information.
Thanks, Patrick.
This concludes our segment on VA Loans Part 2. Thank you very much and have a blessed day. Continue our series on the basics of home financing. Today we're going to talk about the VA loan.